In this video, we are going to look at the bigger picture of Bitcoin and crypto, especially since we're already past the first week of December. Things have not gone parabolic as it has in 2017. So what does that mean? What could lie ahead for the next few weeks and the next few months? All of that we are going to look at in this video. What's up guys, Dirk here. Happy Thursday. If you are new to the channel, hit the subscribe button down below, click the notification bell, so that way every time I upload a new video, you do get alerted. You can also get on my email list in which I can send you free updates and notifications when I upload a new video. It is the first link in the description down below. And if you do enjoy this video, please do smash the like button because it does help the video get out to more people, and then more people can benefit from this content that I create here on this channel for free. Okay, so I want to start this out by looking at a bit of a fundamental picture of what is happening in the space, and then we will look at the charts. So always, like the saying goes, when in doubt, zoom out. So on the shorter term time frames, the day to day, even the week to week, there's a lot of noise and there's a lot of volatility. Okay, markets move up, they move down, there's news events, there's fear, there's panic, there's FOMO. And if you stay too focused on the short term, then it's very easy to get sucked in by all these emotions and all this short-term noise of volatility that you might lose sight of the bigger picture, right? So the big picture is crypto is here to stay, digital assets are here to stay, and they're going to get much, much bigger over the coming years. Over the next 5 to 10 years, the crypto space and the digital asset space is going to get enormously bigger. There's going to be hundreds of millions more people that are going to be using it. There's going to be new projects, there's going to be new infrastructure, and it's basically the next step in technology, the way I see it. Okay, so starting out, even to this very moment, look what happened even just in the last 30 days or so. The amount of money being raised in the crypto space is absolutely insane. Okay, here's just some headlines showing you: Marathon raising 500 million. Paradigm launches $2.5 billion venture fund for crypto companies. Valkyrie launches $100 million on-chain DeFi fund. Digital Currency Group raises $600 million credit facility. NFT music rights startup raises $55 million. Pantera Capital raises $600 million. Citigroup launches $1.5 billion crypto investing venture. Blockchain auditing firm raises $80 million. MoonPay hits $3.4 billion valuation. Coinbase Cloud has $30 billion in crypto assets staked. Crypto investment firm Maven 11 Capital closes $120 million fund. Galaxy Digital to sell $500 million of notes in private placement. 1inch closes $175 million. Crypto.com buys 2 crypto exchanges for $260 million. You can see hundreds and hundreds and hundreds of millions of dollars. And this is just in the last 30 days. It's just non-stop. The amount of money being poured into this space is absolutely ridiculous. Now, why is that good? Well, if this much money gets invested into a space by so many people, so many high-profile people, high net worth individuals, groups, companies, corporations that are all putting their money into this, obviously they're not doing this to throw their money away. Okay, and they understand, yes, you know, it's high risk and there's no guarantees, but they're not stupid. Okay, they're not just throwing their money away, and they have a vested interest in making this succeed. So by them investing this kind of money, obviously that means it's more than just writing a check. Okay, there's a lot that goes into making sure these investments succeed, from lawyers to all sorts of consultants, and putting resources, staff, company resources behind this to make sure that this is a success. So the resources that are already available to all these VCs and companies investing this money, that is also automatically a part of it being allocated to the crypto space. So sure, this is not an overnight thing where this money gets invested and within a week or a month or even within a year that, you know, everything goes to the moon. But in the long term, there's a lot of money and a lot of resources that are putting behind these investments to make sure that the crypto space succeeds. And obviously the more money and resources are being invested into the space, the more likely it is that it's going to continue to grow, so that, you know, these people can realize profits on their investments. Even over here, so despite the market downturn in November, VCs pumped another $4 billion of fresh capital into 120 crypto projects. $4 billion, and that's just there, right? We have Binance that has launched a $200 million fund to invest in blockchain gaming products. Then we have Visa that launches crypto consulting services in a push for mainstream adoption. Visa itself launches a crypto consulting service. Then we have Dan Tapiro's 10T is raising $500 million for a third digital asset fund. You see the amount of money that's going into the space. Fidelity Digital Assets received FCA approval for its UK crypto business. The infrastructure is growing, more and more regulation, more and more compliance, and they're expanding. Fidelity, banks are all building out their crypto desks and their services. And again, it's not a short-term thing. It's not a next week or next month kind of thing. Maybe not even next year, but over the next few years, this is the bigger picture and where the direction is going. You can see over here, even the FTSE Russell plans to develop crypto index with over 40 digital assets. Okay, so this is an index created that will sit along the FTSE 100 and the Russell 2000 index. This is huge. This is mainstream. It's here, and it's going to get a lot bigger. We are still early. So you can see another one here. Tiger Global, Amex Ventures, Visa, and PayPal Ventures invest in blockchain intelligence firm TRM Labs. So you can see it's just one thing after the other. Adoption, investment, growth, and all of this in the big picture leads to a much larger cryptocurrency and digital asset space. So keep that in mind, whatever the short-term thing does, okay? You don't want to be in a position where you get shaken out in the short term because of the volatility, or because you were overexposed, because you let the headlines get to you, and people are making you believe, hey, we're going to get another 2 or 3 year bear market like we saw in 2018, whatever the case is, right? Don't let them shake you out where you were in a position now that could potentially end up being worth a small fortune in 5 or 10 years from now, but maybe they get to you, you sell out, and you never buy back in. That is the worst thing that can happen, right? So again, not financial advice. You have to make your own decisions. Obviously, there is risk involved, but there's also a lot of potential upside looking at all the facts here. So let's go have a look at the charts. So while Bitcoin did drop from 69,000 to almost 42,000 on a quick wick down, now it's currently trading at just about 50,000, 49,778 right now as I'm making this video. This is the log scale of Bitcoin over the last, say, 7 years or so. And you can see that drop was literally just that on the chart. Okay, so while it does seem scary, and it was just over a 30% drop, which by the way is still completely within any sort of bull market correction, it is completely normal for Bitcoin to have between 30 and 40% pullbacks, even in the last bull market in 2017, all the way over here, right? All these pullbacks, a lot of them were close to 30% or 40%, and it looks like nothing on the chart in hindsight, right? But each time it happened, it was really scary. Every time that Bitcoin corrected 30 or 40%, people thought, oh, this is the end, we're in a bear market. Every time, right? Same here. And then we recovered, and now we have this pullback, and again, people are saying, oh, we're in a bear market. But again, what does it mean? What does a bear market mean? And I went into detail in this in our monthly newsletter for members only this month already, so I don't want to get too long into it. But basically, a bear market is just a period of time when the market is in a downwards trend, where it makes lower highs and lower lows until that is completed and the trend reverses back up. Now, the thing that I think that a lot of people misinterpret with the word bear market is that they assume that it only means the same as what we saw in 2018, where a lot of projects went down 90 to 99%. It took 2 or 3 years, and it was just a terrible, terrible period for anyone who's just getting involved in crypto towards the end of the cycle. However, each time the cycle is different, and I believe this time it's different too. As we can clearly see, we are now in December. It is December 9th today as I'm recording this, and last time on 17 December 2017, the Bitcoin cycle peaked, and you can see it had a huge run and it already went parabolic at that point. This time, we have more of a slight double top situation over here. We don't have a huge parabolic run that lasted for the last 18 months, and we haven't really gone to these crazy euphoria levels just yet. So it is completely possible that this cycle is just an extended cycle, right? Meaning that even if we do go down a bit more, or even if we retest the lows of May of this year, which is still possible, that the next kind of bear market isn't really an extended one, that the bear market is completely different to 2018, where it's shorter and it recovers quicker. And then maybe we see something like this, where after this correction is done, who knows how long it's going to take, maybe it takes another 1 or 2 or 3 months, but maybe this is an extended cycle, and sometime early next year, we start a run back up and we go to new all-time highs, and indeed we go to $200,000, $300,000, $400,000, maybe even $500,000, and things go absolutely crazy. The point of the market is that it never really does what most people expect it to do. So if everyone is expecting it to go parabolic, now we can see that is the case. It hasn't gone parabolic, and now everyone's kind of thinking, oh, we're in for another bear market. That's going to take another 2 or 3 years. Price is going to drop back down to 20K or 10K or whatever the case is. And again, if most people are expecting this long, extended, deep bear market, it's probably not going to happen in that same way, and it's probably going to reverse quicker, recover quicker, and then just keep on going to catch as many people off guard as possible. People aren't going to believe the new rally, and they're going to sit on the sidelines, or they're going to be shorting it while it keeps going up and up and up. That is also a very real possibility. So technically, let's just look at this big picture chart over here. So this is on a log scale, it is a weekly chart. You can see this moving average is the 50-week moving average. And what is important to note over here, you can see I've made these annotations on the chart, is that as long as the price of Bitcoin does not have a weekly close below this 50-week moving average, the trend is still up. And in the last 7 years, there have only been 4 times when the price had a weekly close, and 3 out of 4 times when it closed under that 50-week moving average, that is when we had a sell-off. So you can see over here, back in August 2014, we had a weekly close after being above the 50-week moving average. It bounced off it. Here it wicked through it, but it did not close below it, right? So we had that bounce, and then here we had the confirmation of the weekly close below that, and then we had a 70% drop in the price of Bitcoin. So that would have been a good signal to get out, or potentially even short it if that's your thing, if you know how to trade. That is also a possibility, but at least get out, hedge your bets, and then wait for it to recross where it started a massive bull run. Then the second time, after this huge run through 2016 and 2017, all the time we stayed above the 50-week moving average. We bounced off it. Here we bounced off it a second time. The third time we got a weekly close below it. And again, that was a signal where after that point, after that weekly close below the 50-week moving average, we dropped 54%. So this would have been a signal once again to get out of the market, to go into stablecoin, perhaps even short it if you have experience doing that. Then it would have been good to stay out the market till we got a weekly close again above this, and we had a big rally where we went from 5,500 to 13,000. We came back down below it, and this was the exception. This was a fake out. So we did technically have a weekly close here below. You can see it faked out. It didn't really continue. It went up, and then we had the March 2020, kind of the black swan event where everything sold off. We had a weekly close slightly below it, and after that it dropped 50%. But this one recovered really quickly. We had a big drop. So again, this close was a signal to be able to get out. And then once it crossed back above it, that would have been the perfect entry once again. Because you can see once we had a weekly close above the 50-week moving average, once again, it went from about $9,500 or $10,000 all the way up to $65,000, and then it pulled back down. You can see it held as support again. So it's very, very important actually over the last 7 years. We bounced off it. We had a little wick through it, but again, we didn't close below it. There was no confirmed close below this 50-week moving average. And then we had a complete recovery to new highs to $69,000. So zooming in a little bit, you can see we had the sell-off last week with the liquidation cascade, and price dropped from about 56,000. It dropped all the way to 42,000 very, very quickly. But you can see we wicked below the 50-week moving average, but we did not have a weekly close. On top of that, you can see we have a trend line here, which could potentially be a retest over here. And even though the price wicked below it, the body did not close below that. So it could still be a retest. We have the 50-week moving average over here. We also have this horizontal support resistance line over here. So there is a lot of confluence at this point. $47,000 that could still make it hold the line in the sand. We could still get a bounce from here. And if we do hold this and we continue higher, there is still a very real possibility that this bull market is still in complete force, basically, to continue going higher. And that could continue into 2022 for the next 3 to 6 months, and we could still end up getting a blow off top sometime next year with much higher prices, well over $100,000. That is still completely a possibility. Now, if for some reason the price does end up making a weekly close below the 50-week moving average, so below the $47,000, that is when I would start looking for other signals that could confirm further sell-off, because as I've shown you, 3 out of the 4 times that has happened over the past 7 years, that has resulted in a further 50% plus sell-off. So there was one time when it was a fake out, so it's not a guarantee, but that is why you want to combine it with other signals to look for confluence. Is this going down or lower? And then you can make a decision how you want to manage your risk depending on your own situation, how much you've invested, what your trading style is, what your experience is, and you can make a better decision on that. So I just want to point this out to you so that you have more knowledge, and more knowledge allows you to make better decisions. Now, in the case of a bearish scenario, I do want to point this out because maybe it's a possibility. You can't rule it out. You can't say it's never going to happen. So imagine we do get a sell-off. So what I think could be a possibility in that case is that we could retest the May 2021 lows. From the sell-off, it is possible that we get a retest of these lows or perhaps slightly below it, and then start the recovery process, which I think would be a lot quicker than the 2018 bear market. We recover within a few months and then continue going higher, and a lot higher than that. That would be my scenario in the bear market case. But for now, as long as we don't get a weekly close below that $47,000 level, below this 50-week moving average, I think there's still hope for the bulls that the bull run can continue. And, you know, if it closes below, then we'll have to reassess and look at the likely possibilities in that case. Either way, I wanted to share with you the bigger picture in this video. Hopefully I've done that, and hopefully you got something out of that. The fundamentals are still so strong. You can see all the money being invested into the space. It's insane. So in the long term, whatever the short-term noise is in the next few weeks or the next few months, in the long term, I can only see this going a lot higher. And of course, not all altcoins are going to survive. There's 11,000 altcoins. Most of them are probably going to end up going to zero or getting worthless. There's no way 11,000 altcoins can only continue going up. But Bitcoin and the solid projects, probably Ethereum and quite a few others, do have a very real chance of becoming a lot more valuable over the coming years as this space continues to grow and expand. So hopefully you did enjoy this video. I hope you have an awesome day, an awesome weekend. Smash the like button if you haven't done so already. Leave a comment with your thoughts. What do you think lies ahead for 2022? Would be interesting to hear your thoughts as always. And I will probably still make at least one more video before the end of the year. So I will see you in the next video.